Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Friday, June the 13th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Well, we've had a very eventful overnight, and for those of us that, are nervous about these sorts of things, we always want to be concerned, but here's the storyboard. In the overnight, take a look at where the E-mini S&P went down to and stopped. That's the weekly expected move at 5,926. It actually came into the low of some Globex hour. I don't know how far back it was. Let's have a peek. Oh, that number is here at 59.30. Just lost it, came into the expected move and bouncing. So when we have a storyboard like this, two things come to mind. One, statistically speaking, because there are so many skirmishes in the Middle East, they rarely have more than a 72-hour effect on the market from a downward flow. And remember, there are a lot of traders who missed the move to the upside and are buying the dip intraday. On top of that, as I mentioned on Wednesday, perhaps, or it might have been yesterday, but it was Wednesday's data, I talked about traders putting on hedges for downside pressure, big money putting on hedges for downside pressure, and that's going to potentially unwind today. Not sure how much, but that's big news. Okay, so what are we looking at? The expected move on the low end, 5,997. Expected move on the high end, 6,091. We have a lot of futures traders that were short, and it looks like they are unwinding into the morning. What is trend? Flat to up. Notice the range. See how many boxes we've got floating around in here. We have a range formation right at around 6,000. If we get up over 6,000, price action will continue to move to the north. The opening range is about 15 points wide. And literally, we faded it, bounced into the high of the trading candlestick from June 11, and then rotated downward. If you don't draw these boxes, you should. I've added a new line, and this is the ADR. This is the average daily range of this formation in the current time. So it's continually calculating it on a daily range. Notice the widening expansion outside of the average daily range. It normally tells us the following. If there's not something super dramatic going on, we have to look at the levels that push us back into this formation above. So what are we staring down? This could be a very interesting two-way tape today. We have momentum that is up. We have trend that is down to flat, actually up to flat, excuse me. And we have the shorts unwinding in this formation. So what are we seeing? We're seeing market recovery. So my suspicion, now that we are above the VWAP and below the moving average, that we come into the highest volume candlestick of the day prior, which is marked by a high region at around 6,027. Could we reverse? Absolutely. We could absolutely reverse. And so what we are staring down now is the tight formations. Here we have a great big move up. If you're saying, wow, can I take advantage of this kind of formation? I want to move to the simple things, okay? The simple things are, where's the box of congestion? Order filled. And where is the trade action holding in this range? And notice, you can see the box of accumulation and then distribution at a premium, right? They hold these ranges. This is a very messy one, but you can see it breaking back above the average daily range and holding above the VWAP. All of this formation tells us, listen, your ideal event long is going to be at around 5,986 if you are looking to trade upside. Notice the trend is down and momentum is up. What's that going to give us? A cross current. So 6,017 looks like a pretty nice number for a target zone. And then the close of the VWAP on yesterday, and that's 60.33. Don't think this is going to be super bearish at this juncture. All right. Okay. There we go. Let's go to the NQ. That was the E-mini S&P right there. Let's take a look at the NQ. Expected range to the downside, 21,703. Notice, average daily range breaks out and down and then tries to recover. There's the box of accumulation. Retest of the box gives us the long. And now we are moving into resistance, which is the low of the Globex event occurring on June 8. This is a wide range of accumulation. Also, traders have got to get up over this box if they're buyers. Now, my suspicion is that they will. And so that's what we're going to stare down. We're going to stare down that range and we're going to say, all right, let's see if we can get up over that zone, move to the small time frames. There'll be a box of inventory accumulation, and then we will either distribute at a discount or premium. You make your trade risk environment sitting at that edge. Okay? If it holds, we move up into the trading box, which is almost right at the low of the opening range. That opening range, 50 points wide or so. Okay, so sideways motion, but the updraft caused by the unwinding of the shorts here could push us back into the space. If a lot of people, warmongering, whatever they're doing, get very nervous and they've shorted this area and we come into this zone, we're going to have ourselves a squeeze back to the top of that expected move at 22,111. Again, expected move to the downside, 21,703. We've broken that. Expected move to the upside, 22,111. Notice the expected move to the downside was now tested in the NQ. That's 21,394. Let's go to the YM. Beautiful. Okay, so same sort of thing. YM range, remember, these guys don't trade daily options. They only trade monthly options. And the short sellers of the wings on either side have done very well. This has been a sweet chart. I have to look at the diamonds to see if there's something in a trade that we can set up for the following month here in an iron condor because the YM is behaving so well. We'll have a look. Resistance range is, however, the same. The high volume candlestick for yesterday was a bearish formation, and we are coming in to test that at 42,639. What is the upper edge? My thoughts on the move here, 43,038. On the bottom edge, I suspect we hold the low of the average daily range, which is around 42,413. Let's take a look at Bitcoin. Pardon me. Bitcoin, wide opening range. Notice for the risk threshold here, again, a lot of traders have been buying these options and just really doing tremendously well. But take a look at what happened at the low of the weekly. The weekly implied vol move came right into the average daily range. That was, of course, it moves constantly from the width. And so we've got ourselves a low end, 102,000 823. We just kissed the edge of that. And now, I'm going to move some of these lines off. Now we are trying to test the low of the opening range for Bitcoin. So 105 to 106.7. Looks like about an 800-point move. Traders should go there. We're above the VWAP. Trend is very sideways, right? It's up here, it's down here, it's flat over the range. Super noisy, but absolutely. All right, so what do we expect? Low of the expected move, 104,756. High of the expected move, 107,829. I would not be surprised if we bounced all the way back up. I really would not be surprised at all. Actually, I really wouldn't be surprised at all. Okay. Hang on. I need to move my stop. I'm in a copper trade. All right. So that's what we're seeing. Reversion to the mean. Shorts unwinding in the overnight, right at the average daily range. Absolutely love it. Absolutely love it. Let's take a look at copper. Copper, bottom of the expected move. Notice how wide the range is for copper. Again, these guys don't trade daily options. And so we are looking at trend. This, I have to tell you, I am loving the way that copper trades. Hat tip to Deanna Angela, Pip Raider on X and on Top Step TV. Just really turned me on to this contract, and it is truly beautiful. Bottom of the expected move, 4.7165. Old resistance, 4.80, and then close of the expected area, 4.8170. This is a potential dip buying formation. I am long copper at this juncture, and I'm up about 300 ticks. And so that's very lovely. Super happy about that. All right. Do I think it collapses up on this edge here? I do. I don't see a tremendous amount of movement at the front edge, but overall, folks, all commodities and energy will spike in this kind of environment, particularly copper, gold, oil, all kinds of metals. So that's what we're watching at this particular juncture. All right. Hang on a second. Gonna move stop up. All right. Let's go to oil. Oil blew out of all of its levels. Absolutely rocketed. This happens in the Mideast. And here's the kicker. Now, I'll be on Serious Business Radio in just a few moments. And so what we're really going to be talking about is what the spike in energy, if it holds, what it's going to do to emerging markets and Europe. It's going to put them in a whole heap of trouble because they cannot afford higher energy. They simply cannot. And so that's a big deal. Are we outside of all of these ranges? Yes, we are. Let's take a look at a daily chart here. Take a look at this. This very energetic move, but collapsed right off of this selling zone. And take a look. This candlestick here at, what month is this? January 22nd. That's the box. As long as we've rejected that box of high volume, we'll be okay from the fade down to potentially buy the dip of higher lows. Okay? So for oil, what are we staring down? Low of the expected move, $67.20. High of the expected move, $70.80. We are printing 73.73. This chart is very likely to hold for, I would say, maybe 72 hours, 3 trading days, and then potentially flatten out. Now, as I've said that, here's the important thing to realize. For today, VWAP flat. We have a high and a low, and now presenting a lower high. We break out over $74.31. We're back up to $75.39, $75 to $76, $75.75 to $76. Or we stair step back down into 72.12. The top of the average daily range is $71.43. This range expansion here tells us that this is happening under unusual news formations. Okay? Super important for us to consider. We've blown through the weekly expected moves. So on top of that, if they're holding this contract short at $67 or so, they are going to have to continue to buy in the direction of trend until that support breaks. And that's going to be under $70.79. Looks very bullish at this juncture for oil. Let's take a look at gold. Gold rocketing. Gold is that measure of uncertainty. Take a look. Runs right into the average daily range. Pulls back. Look at the expected move for today. It's well over it. On the upside, $3,431. On the downside, $3,376. Here's the inventory accumulation right here. The breakout of the box sends us to the upside. In my mind, this is a buy stop sitting right here at $3,456 all the way to $3,467, at which point you want to take some profit because we saw selling there, and that is the edge of the expected move. Beautiful trades here. All right. Opening range formation. Wow, this high candlestick right here carries more volume than the trading days high. Wow, look at that. All right, we stay outside of this 3,442 box. We are going to have upside, folks. We definitely are going to have some upside if that happens and it keeps us out of this high volume box. These guys are not retracing. They are still following trend. They were long in the overnight. They continue to be long. They had a minor distribution event, and now they're moving back up again. This prior high, again, this would be a place to take profit if you've been long gold. So last night I read, just before winding down, that we've got ourselves a pretty solid skirmish over there in the Mideast. And I thought to myself, whoa, I bet this is going to be an interesting trading night. And then I went to bed because I know that my brain works better when I have sleep. And lo and behold, I got myself some of the best sleep I've had in easily 5 or 6 days. I feel fantastic. Okay, opening range for the SPY, about $2, right? Looking right around that edge. I am going to delete this line and this line because they're noisy right now. You can see that we're holding right in that range. Look at where the spike took us. High of the high volume candlestick from yesterday, 3 o'clock candlestick. Okay, that gives us the top. Also the top here. And now we are back inside of the expected move of today. What does this tell me? Well, it tells me a little bit that I have got a pressure event that is potentially sideways, right? Potentially sideways. And so what we are now staring down as pullbacks into buy zones. I like the long at 595 to 596. If it loses that edge, the low of the expected move, $593.49. The high of the expected move, $599.30. If we close an hourly candlestick over this range, we're going to be back in the noise. Trend is up, folks, and momentum is down. What does that mean? Candlesticks will retrace each other. Look for your edge, and that's going to manage part of your risk. That's going to be a beautiful part of the trading space. All right, let's take a look at the cues. Remember, what we want to do is wait for the opportune moment that gives us the highest reward and the lowest risk. Okay? Cues Opening range looks like about $2 wide, maybe. Just shy of $2 wide. We came into the base of the opening range, $525.57, and began to bounce. Now, we're really up at a key line. That's the close of the VWAP reading from several days past. I'm going to move it out of the way. I do expect the traders to try to fill the gap. What is the high of the expected move? $529.95. Easily, we could head back into this selling candlestick into the edge of the day. Pretty interesting, if you ask me. I'm a big fan, big fan of what's happening right here in terms of building a base so that we can go long. All right, so again, for the Qs, low of the expected move, $523.11. High of the expected move, $529.95. Look at where the ADR is, $524.78. That's going to be the low edge. It should probably hold. If it doesn't, $520.69, expected move to the downside. You want to be careful here. Don't rush and think you're going to, oh, I've got to get involved. You don't, right? We're trying to get out of this box right here. That's the range. Dips into that ADR should give us long pressure. And if the buyers turn around and go, holy cow, I've definitely got to buy some of this stuff, we're going to run up and fill the gap. All right? We want to be careful in this market. We really do. All right, that's it for me. Take care, and I'll see you on the streams.